Welcome, everybody. This was I think we're just under the wire, right? I think the deadline for applying is coming up, and our speakers will talk about that. But this is an important program, and we're going to learn all about the senior tax freeze this morning. So we have Yasir Ahmed and Manisha Moore, otherwise known as Mo, I take it.
That is true,
All
yes.
right. So take it away, guys.
All right. Thank you, everyone, and good morning. My name is Yasser. I go by Yas for short, and I'm joined today with Monisha Moore, who goes by Mo for short. So we will be presenting to you any information that we can for the 2019 Senior Freeze application, the PTR1. As you all may know, the deadline has been extended to December 31st, so this is the last month if you haven't already done so. This will clear up any remaining questions that you may have. So without further ado, I will go ahead and share my screen. All right, can everyone see that?
Yep.
All right, excellent. So before we begin, just to go over what we discussed a little bit earlier, I myself will be presenting the slideshow, and any questions that you have, you can enter into the chat. Mo will respond to the questions as they come in, but we will be stopping throughout the presentation to discuss any questions that may come up that everyone may want to hear as well. And of course, if there is by any chance a question that comes up that we are unable to answer during this presentation time, we can certainly email you back by the end of the day to clarify any questions that may have come up. All right, so is everyone ready to begin? I'm sure you all probably have your mics off, so.
Well, I'll speak for everybody. Yes, sir. We're ready to go.
All right, wonderful. All right, so again, everyone, today's presentation is on the 2019 Senior Freeze, and this is brought to you by New Jersey's Division of Taxation and our branch, which we refer to ourselves as Taxation University. All right, so the way this presentation is structured is we go off of the booklet and the application. So if you have your booklet handy, we will be walking through the booklet. So this here is the booklet that we're speaking of. It's the blue booklet, more properly referred to as the PTR1. All right, so as you can see there, it gives the old due date, November 2nd. It has been extended to December 31st. And there is a hotline that you can call, 1-800-882-6597, to have any questions answered if they come up. So if you open the front cover of page 1, we have the eligibility requirements. This is the most important part of the program because there are few requirements. However, each of them are important. All right, so the main rule is that you must be age 65 or older or receiving Social Security disability as of December 31st, 2018. The PTR1 is a 2-year application, so you have to meet the requirements for both years. For continuing applicants, they file what's known as a PTR2, and that you only have to meet the requirements for that one specific year. But for first-time filers, it's meeting requirements for 2 years. So that's why you have to be either meet the age or disability requirement as of 2018. You also have to have lived in New Jersey for 10 years, so that would be 2008. You have to have owned and lived in your home for 3 years, which would make it December of 2015. And you have to have paid your property taxes on time. However, for homeowners, there is a grace period as far as the senior freeze goes. As long as you paid your property taxes by June 1st of the following year, then you still qualify for the program. All right. For mobile home owners, they have to have them paid by December 31st by the year's end. All right. So that is the first guidelines. Do we have any questions so far? All right. Let me. All right. I'll go ahead. All right. So that was the first page of the instructions. Now this is the first page of the application. As you can see, everything that we covered as far as the eligibility guidelines, the age, the disability, and how long you've been living in New Jersey, as well as how long you've owned your home, are all asked for your response on the first page of the application. So that gets you through 1/3 of the application already. We are done. So let's take this time now to ask a full question. All right. In order to meet the age requirement for the senior freeze form PTR1, that's the 2019, you must have turned 65 or become permanently disabled in which year? Was it A, 2019, B, 2020, or C, 2018? Give everyone a brief moment just to submit their responses. All right, and we have that answer there is correct, is 2018. All right, simple enough. Let's continue forward. All right. Now, the next requirement that we get into is income limits. For 2019, that income limit is $91,505, and the 2018 income limit is $89,013. All right. Now, you can find the income standards, which are basically all of the forms of income that must be reported on your senior freeze application on page 2 of your instructions. On the right-hand side, we have the income standards. So as you can see, it's a long list. Not all may apply to you, but this is what applies to all applicants. Some of the most common categories are Social Security, unemployment, military pension, and all New Jersey lottery winnings. So for New Jersey income tax purposes, on the yearly tax return, you're not required to report your Social Security, your unemployment, your military pension. And there are certain rules and specification as to what lottery winnings you do and do not report on your income tax return. However, for senior freeze purposes, those categories are required, and therefore you have to disclose them on the application. Now, we are always asked, well, if those most common forms of income are asked for, what is not asked for? And that is answered on page 3 on the left-hand side of your, in the instruction manual. On the left-hand side there, you have the list of what can be left out of your income worksheet. Doesn't leave a lot. You can certainly take the time to go through it. Not a whole lot of room there to leave out on the income worksheet, though.
Yes, can I step in for a second, because we have several questions and I just want to answer them.
Absolutely.
So one question we have from Gigi is, do you have to be on disability? So as it relates to being on disability, it's either you have to be on disability or you meet the other eligibility requirements. So I'm not sure if you have a book, Gigi. Can you unmute yourself? Do you have a book?
I didn't hear you.
Do you have a PTR1 book there with you?
No, I don't.
Okay. So it's either that you are going to send us information as it relates to proof of age or proof of disability. So for applicants who are not 65 or older, but are receiving federal Social Security disability benefits, you'll have to submit that copy of your award letter from the Social Security Disability Administration showing that you are disabled.
So if you're not on disability, do you have to, can you still, if you meet the income requirements,
So
receive a
if
tax freeze?
Right. So if you're not disabled, then you have to meet all of the other eligibility requirements as it relates to the program. So as y'all stated, there are age requirements, there are income requirements, property requirements to become eligible for the program. So it's
What was that third one? I'm sorry, I didn't hear you.
Property. So how long you have to own your property. Mm-hmm.
Yeah. Okay.
Okay. Yas, there's another question asking about how they get the forms. So all of the forms are available on our website at njtaxation.org. So njtaxation.org is our website. Those are for the PTR1s. So the PTR1s are for people who have never been in the program or didn't receive payment for the previous year. So even if you're looking for a 2018, a 2017, 16, you can print them offline, off of our website. If, however, you don't have printing capabilities, there is a phone number that you can call to request the book. So the phone number is 1-800-882-6597. I know some of us are struggling with getting to the store getting ink, like I am. So if you can't print anything, you can definitely call that number. And Beth, you put a C in here. I'm not sure what that C is. Unmute yourself.
Yeah, I'm unmuted.
Okay. You put a C in the chat.
That was in answer to the 2018 question.
Yeah.
He said A, B, C.
I thought he was asking something different.
No, that's nothing. Nope.
Yep.
Forget that.
No.
Okay.
Thank you.
Nope.
Okay.
I think you've answered so far. I mean, I think you answered all my questions. Thank you.
Okay. And Marilyn, one more Yas before Marilyn asks, how far can you go back to file for? So if you are eligible, if you find that you're eligible for years that you didn't apply for, you can go back as far as you need to. But a couple of things you must be aware of. You will not get the reimbursements for those years. That's because the deadline is passed. So if you miss the deadline, you won't receive the reimbursements. However, you can file as far back as you need to. And what the benefit to doing that is you get a lesser base year, let's say it, because if you think about it, the taxes go up every year. So let's say I found out that I was eligible in 2015. Of course, my taxes were lower in 2015 than they would be, in 2020. So you get to establish that lower base year. So when you file for the current year, your reimbursement will be a pretty hefty reimbursement depending on the taxes. Is that good, y'all? Did I explain it well?
Yeah, you actually did some of my job for me.
Oh, oops.
All right, everyone, you can go on with your day. We got it all covered. I'm just kidding, but we will touch on how to file for back years as well later in the presentation. But again, those are all great questions, and thank you, Mo, for responding to them. All right, so let's go ahead and continue. So now we're at page 3 of the instructions. So one of the things that we discussed as part of the income requirements are your pension or your retirement income. So there has been a change in recent years to how we treat pension income when it comes to the senior freeze. So in previous years, we required that you report your entire pension distribution. Now we only require you to report your taxable pension amount. So if you complete Form NJ 1040, again, the New Jersey income tax return, then you would use line 20A. So line 20A would provide that taxable amount. Now, you still have to include any tax-exempt retirement income, such as your military pension, disability, or Roth IRA. The only thing that has changed when it comes to retirement income is your taxable pension. So that is what's reported. All right, so this here for PTR1 applicants, we have the income worksheet. There is 2 pages, one for 2018, the other for 2019. And they're basically identical. And as far as asking you to report your Social Security, your pension, retirement, salaries, unemployment, disability, so on and so forth. A lot of this, again, if it's not reported on your New Jersey return, you will have to look to your federal return because the Social Security and unemployment are 2 things that New Jersey does not ask for on your tax return. And of course, as we discussed earlier, 2018's income limit is $89,013, and 2019's income is $91,505. All right, so now we are 2/3 of the way complete with the application. So now we get to our second poll question. All right, due to financial hardship in 2019, George withdrew a large amount from his retirement account. If George reports it, his income will exceed the limit. Because he took it out due to hardship, he doesn't have to include it on the income worksheet. Is this true or false? So he's taking a early distribution, a large distribution, and he's taking this out because he's having financial hardship, and it is reported as taxable income. All right. So, see, we have a couple answers in the chat. Give everyone else just a moment to respond. What do you think is true or false? All right, great. I see you all are on the right page. That is false. Although large distribution, early distributions may come at a time of financial hardship, they are a form of taxable retirement income and therefore are reported on the senior freeze application. We see this quite often where someone took a large distribution that changed his normal yearly income. And unfortunately, when that happens, if you do get bumped out the program, you do have to start all over again by reestablishing a new base year.
Can I say something?
Absolutely.
Okay, so there was a question and then your poll came up. So I don't want anybody to get confused. So the poll, the question, I'm sorry, not the poll, says if filed taxes jointly, does only one person need to be 65? So yes, when you're filing jointly, only one person has to be 65, but keep in mind when you are putting the income is for both. So you would have to report all of that just to see if you are still eligible for the program. But yes, only one person has to be 65.
Right. Right. So only one person has to be 65, but both incomes have to be reported.
That's correct, yes.
All right. Thank you. Thank you. Let's continue on. So again, now we're 2/3 complete with the application. So now we're getting into the nitty gritty, the last page. So now we get into ownership and occupancy. Most of you all, if you are straightforward owners, you only have a single family home and you are the only owner, then the answers there may be pretty straightforward. But of course, if you're a multifamily owner or you have, multifamily property or you have multiple owners, that's what we're going to discuss now, how to report that. So for first-time applicants, they must indicate their percentage of ownership for their property. All right, so if you own if you and your sister share ownership, then you own 50%, your sister owns 50%. The only time where a question may arise is if you have life estate or life tenancy rights. What this basically means is that there has been a revision done to your property deed, which gives you as the occupant the total ownership, the full ownership of the property until you pass on. So in this case, your life tenancy, it goes according to the deed, which in most cases, if it's a parent and child situation, the parent maintains the ownership of the property until their passing, which is then when the children inherit the property. All right, so that's the only situation there. Otherwise, you just go by the percentage of ownership on your deed. And the same thing goes for occupancy percentages. Again, if you single family home, nothing to worry about, you're 100%. However, if you're a multi-unit owner, then you do have to go by the percentage of your primary unit. If this is even split 50-50, then you report that as so. If it's something like 70-30 and you use the 30% as storage space, or it's an apartment that, again, your child or someone stays, a relative stays, then you would use the larger unit if that is in fact the unit that you occupy. All right, and all of these claims have to be verified, and they will be indicated on your future PTR2 applications. So if you receive a PTR2 and you see that there is the wrong number, then you can certainly call that number that's on the booklet to get any matters cleared up. In a very rare case, there might be a scanning issue. But in most cases, these rates are verified. So be aware of that.
Yes,
Yes.
if I could interject.
Absolutely.
So we have a statement in here. I just need some clarification. It says, my sister and I have both our names on both of our houses, but we each pay our own taxes and we each only occupy our own house. Marilyn, if you could explain that a little bit. Did you need more clarification? Oh.
Yeah, my sister and I have both our names on both our houses because we started out, we were gifted our grandmother's house, so we just put both our names, on our houses. But she occupies and pays her taxes on her house, and I occupy and pay taxes on my house. So do I still have to consider, do we each have to consider each other's income in with it, since we totally operate separately with our two houses? It's just that both their names are on it.
Right. So not the income as it relates to it, but as Yaz was just saying, there is a spot on the application that talks about ownership. So it will go by the percentage. So I don't want to say unfortunately, but let me just try to clarify it for you. So you live in your own home and you pay the taxes on your home. However, your sister's name is on the deed. Whatever percentage you own on your home, if you are eligible for the program, you will get a percentage based on what the deed says. So if it's 50-50, you will only get 50%. You could only claim 50%, let me say that, and as well as your sister. But you're not going to claim her home that she occupies in your home.
And I don't have to claim her income.
That's correct.
So that means that each of us, because we're both over 65, each of us will only get half for our house.
If both of those deeds say 50%, if the deed that is on your home says that your sister has 50 and you have 50, yes. If the deed on the home that she occupies says 50, yes.
Then we're each losing out on 50%?
You could look at it like that because they are going to look at the deed. They have to look at what the deed says.
Yeah, we've been talking about it for years that we need to change the
Change the deed, yeah.
to reflect what we're, our actual situation.
Yeah.
Oh boy.
I'm sorry.
Not your fault. Okay.
Did that help though, Marilyn?
Yes. Thank you very much.
Yes, ma'am. Yaz, one more. Can you apply for the senior freeze on a vacation home? No, you cannot. It's your primary residence. That's it, Yaz. Thank you.
Thank you so much, Mo. Right. So those were, again, fantastic questions. Certainly need to be addressed. And moving on here. On your instruction booklet on page 4, it does touch on multiple owners and multiple units right there on the left-hand side as circled below. So if you do need to go back and revisit this scenario, that is certainly there in your instructions as well. All right, so again, as we mentioned before, there is the PTR1 for first-time filers and the PTR2 for returning applicants. So what the PTR1 does, just to clarify, is that it establishes your eligibility for 2018 and 2019. Given that you meet the requirements, this reserves your base year at the 2018 level, and you look to receive a reimbursement on the difference between your 2019 and your 2018 property taxes. This is your reimbursement amount. And for future years, your 2018 will remain that base year. So that means you still pay your entire property taxes that's asked for of you on your property tax bill by your local township. But then when you apply for the senior freeze, that's when you get to look for the reimbursement on a difference. And proof of property taxes paid must be included with a PTR application, and we'll discuss next what that is. But here is the last page of the application for PTR1 filers. Again, remember this is a 2-year application, so the same thing it just asks for both years. So at first it asks if you're a homeowner or a mobile homeowner. It asks you for your block and lot number. Qualifiers are only for condos. And the ownership and occupancy is what we were discussing earlier. So those occupancy rates and percentage rates should be reported there. And then again, your 2019 and your 2018 property taxes are reported on line 13 and 14, which allows you to calculate the reimbursement on line 15.
Marilyn, if I could, Yas, could you go back to the slide? I want to show her. Marilyn, if you look at 11, here it says, did you share ownership of this property with anyone other than your spouse or civil union partner? And you would put yes, and then at 11B, It
Yeah.
says if you answer yes, indicate the share. So the percentage of the property owned by you and your spouse as opposed. So if it's yes, and then it's 50% for 2018, then you would put yes and 50%. If it's the same for 2019, you just go over to the other column and put the same percentage there. So that's something that you should, be careful and pay attention and make sure you look at the deed, or, you may know what the ownership percentage is, but I just wanted to bring that to your attention.
Can I ask a question, which I don't think you can answer it? Do you know anything about putting in a change for a deed?
No, no, I do in a way, but let's talk about it like off of this.
Okay,
Okay,
thank you.
all right.
All right, so once you have your occupancy rates down, one way that we verify those rates is on your PTR 1A. So part 1 is completed by you, the applicant, and part 2 is actually completed by your local tax collector's office. So of course, you want to follow the COVID requirements for your local town. However, in years past, you could just walk into the office and they'd have it done for you. It might be, so you certainly want to check with your local office on how they're handling it. If there's a drop-off pickup scenario, if there's any other options. But this here is that form that the tax collector verifies, and it is used as one form to verify your percentage rates as well. Okay, so to recap, for a first-time filer, once it's time to mail your application, everything that will go in that envelope will be the completed application, along with your proof of payment. So that can be the PTR 1A, which we just discussed, is completed by your tax collector, or you can submit other forms of proof. All right, and those other proofs can be a final tax bill for both years, and either all of your canceled checks. So if you pay quarterly, then that's 4 checks per year, so 8 canceled checks, or your Form 1098 for both years. All right, I believe the Form 1098 your mortgage company gives to you to indicate how much of your mortgage payments went to your property taxes. And then lastly, you have to submit proof of your age or disability. If you're providing proof of age, again, that's a driver's license. You can also use a birth certificate or church records. And if you're providing proof of disability, then what you want to submit is your Social Security notice of award, or simply put your award letter. All right, and again, if you need to go back and touch on this later, those proofs are all indicated on page 3 of the instruction manual. All right. Now, for second year and returning filers, their process is a little bit simpler. Their PTR2 comes pre-printed with the base year, as well as any other information that we assume is not changing year to year. So that all comes pre-printed. So all they have to do is verify their 2019 eligibility, and they receive the difference for 2019 and their base year. All right. So if you met the requirements as of 2015, you did the 2016 PTR1. 2015 is your established base year. You receive a difference between 2019 and 2015, your base year. So you just keep filing the PTR2 year after year, and you continue to maintain that base year and look for that reimbursement. But now let's discuss how to apply if you've missed any years. But before we get to that, this again is the last page of the application for PTR2 filers. Again, lines 8 and 9 ask for if you own the property with anyone else, or if you occupy part of your residence, do you have multiple units, and you put those occupancy or ownership rates there.
Yes.
Yes.
So there are 2 questions in the chat asking about how do you go back years and, if you wanted to establish a previous base year. So this is what you're going to talk about right now, right?
Right.
Yeah.
We're about to get to it. I promise it's in here.
Mm-hmm.
And all right. So, but before we get to that, we have another poll question. All right. So John and Mary own a 2-unit home, but they occupy the entire property. To calculate their reimbursement, they should either A, claim 100% of their property taxes since they pay them all, B, claim the percentage amount of their main unit, or C, don't claim anything. They're not eligible because they own a multi-unit property. Well, we know that you can't claim 100% of your property taxes if you are either a multi-owner or have a multi-unit property. So that rules out A. Now, do they claim the percentage amount of their main unit? Maybe, perhaps. Or C, they don't claim anything. You don't want to just not apply. We do have a portion of the application for multi-unit owners. So the correct answer, there you have it, is B. You claim the percentage amount of your main unit. All right. And I see here that yeah, so next we get to deadline and payment information. I see a question in the chat about how reimbursements are delivered, so let's discuss that now as well. So the deadline, as we mentioned, has been extended to December 31st. The first payments that were issued began this year on October 15th. If you are a returning filer, you know that the state of New Jersey strives to send the first checks out July 15th. Of course, with the pandemic this year, they were unable to do so. So October 15th was when those first reimbursement checks began mailing. And they are still continuously being sent out and will continue to go out until all of them have been issued. Now, for 2019 senior freeze, there is no budget restrictions. Payments will be issued to all eligible applicants. What this means is that in years past, there was when the application would go out, in, say, like February, and the pre-printed information on the booklet would say, hey, the income limit is 90,000 or 80,000. And then by the time July would roll around, there would be a budget hearing. New Jersey's legislature and the governor get together and develop the budget for the year. And when they had their budget hearing, they determined that only those whose income was below 70,000 would receive a reimbursement. Anyone whose income was over 70,000, they would stay in the program. They would maintain their base year. The only thing that would happen is they wouldn't receive the reimbursement, which certainly is the icing on the cake. But in any regard, that was in years past. This year, there are no budget restrictions of that sort. All right, and so let's discuss some problems that you might run into. Now that we've discussed how to complete your PTR1 or your PTR2 applications, just some common problems that we run into. All right, so if you received the PTR1 and you believe you should have received the PTR2, please contact the hotline that's given on the booklet, because there may have been a letter or a notice sent out to you asking for additional documentation, and for whatever reason, it was just you didn't receive it. So there may be additional documentation, again, if you claim multi-owner or multi-unit, there might be something that needs to be cleared up or verified there. If you're filing for the first time and you didn't submit proper proof of age or disability, that's another common scenario. So please just give us a call and have that cleared up if you do believe you've gotten the wrong form. All right, now there are a few reasons why your base year may change. One is if your income exceeds the original limit. We discussed this before about early retirement distributions. If you take a lump sum distribution, if you do exceed the income limit, then you do have to reapply. So for example, if your income limit went over, if you went over the limit for 2019, then not only would you not be able to apply for the 2019 PTR1, but you also can't do next year's PTR1 because remember, it's a 2-year eligibility form. So if you went over for 2019, you actually have to wait until the 2021 PTR1 in order to apply. So what this does is you have to establish a new base year. All right, so that's done on future applications. Now, another instance would be if property taxes go below the base amount. We also see this more often than you would think, where a reassessment occurs, a reevaluation occurs, and the reevaluation actually lowers the value of the property, thus lowering the property taxes. Depending on how you want to look at it from a homeowner, there may be different ways you can feel about it. But as far as the senior freeze program goes, you're actually winning out in the long run because you're paying less in property taxes now. So if it goes below that base amount, you do have to reestablish your base year, but it is for that lower amount. So overall, after you've paid all your taxes and you receive a reimbursement, you're actually paying less than you would have with the old base year. So that's to your advantage. Again, depending on how you look at it.
Yes.
Yes.
There's a question that asks, does that mean that there are no income limits for the 2019 tax freeze? I think what they're talking about is when you said that there is no budget restrictions.
Right.
So, and correct me if I'm wrong, Marie. So in previous years, the budget has always called for some kind of adjustment to what's originally written in the book. So I'm not sure if you have it, but on the application itself, now the application is the red and white form. If you don't have it, these instructions are on our website at njtaxation.org, as well as the forms. But what Yaz was speaking about is on these forms. Oh, I don't know if you can see it because I have my background on, but they talk about 2018 that the income is $89,013. And then they say for 2019, the income limit is $91,505. So you can't go over those amounts. What happened previous years was that the budget didn't call for those printed amounts in there. So they lowered the income. Most years they lowered it to $70,000, right? But this year, what Yaz is saying is that there are no budget restrictions anymore. We are going to stick with what is written in the book, which is a higher amount. So that gives most people maybe a chance to become eligible. If they lower it to 70,000, most people will probably make 70,000 or more, so they wouldn't be eligible for the program. So I think that's what you were talking about, but there is an income limit as it relates to 2019, and that's the 91,505. You cannot go over that to be eligible.
Right, exactly. All right, so
is the reimbursement taxable income? No.
Not for New Jersey purposes, no. All right, so we've discussed what to do if you've, in case you received the wrong form. We were discussing what might cause your base year to change. So if now your base year could also change if you've moved. So what the senior freeze has done, this is going back some time now. I've been with the Division of Taxation for 10 years. So I've seen a few changes, not too many, but a few. So there was a time when if you moved, you had to live in your new, if you moved and you were already filing the senior freeze application, you had to live in your new home for 3 years before you could apply. That has since changed, and now you can reapply after just 2 years in your new home. So what happens is if our records are accurate and we see that you have moved, and we usually update our records if you file like a homestead benefit application or a tax return, that automatically updates your address in your file, in your tax record, whatever you may like to call it. So as long as you're filing something else other than the senior freeze, we will know that you've moved. So once that happens, that basically triggers a response in the system to send you a special form known as the PTR1C. The C, I take it, would stand for change in address. So that PTR1C gets sent to you after you've been in your new home for 2 years. All right. And so you would just complete that PTR1C along with the PTR1 and enclose that with the entire application. And one of the last reasons is if you've had an added assessment made changes to your property. Of course, if you increase the value of your property, then it also increases your property taxes. So we'll discuss what to do that in just a moment as well. I promise there's much more that we still have left to cover in this presentation. So I promise we'll be getting back to a lot more. But I see there's a question in the chat. Let's go ahead and discuss. Is the reimbursement taxable income? We discussed it. No, it is not. How far back does the freeze go? I believe it started in the late 90s. We are going to, don't worry, Gigi, we will get to how to do the back year filing. We actually kind of saved the best for last. So that is the last thing that we touch on the presentation. So I'm sorry to keep you waiting. Please bear with us. We will be getting into those back years in just a moment. But before we get there, let's discuss if an applicant moves. So I already mentioned the PTR1C. You've already been enrolled in the program because you were a senior freeze applicant already, and you've been filing for a few years. You decide to move. You want to either downsize or you want to move closer to the Jersey Shore. So whatever the case may be, you've decided to move after joining the senior freeze program. So, but you're staying in New Jersey. So I think that this increases the incentives for seniors and other applicants to stay in New Jersey even after they retire. So which I think is great. So this establishes your eligibility after 2 years. Again, the division sends you this form automatically. And if you don't receive it, you can call us at that hotline to receive that form. All right. Poll question number 4. Now, Judy has been in the senior freeze program since 2013. In 2019, she decided to downsize, so she sold her home. She purchased a condo in Haddonfield, New Jersey, which personally, if you wanted to downsize, I don't know if Haddonfield is the place you want to buy a condo because it is expensive. How long will she need to live in her new home to be eligible for the senior freeze again? Will it be 1 year, 2 years, or 3 years? I already see the answers coming in the chat. As we discussed, she is already in the program as of 2013. She only moved in 2019. So as you all have answered already, that is correct. It is 2 years. All right, and to be very clear, it's 2 full tax years. So January 1st to December 31st, 2 full tax years. All right, now, when it comes to reevaluations or added assessments, to put it in the most simple of terms, Sorry about that. All right. So to put it in the simplest of term, a reevaluation happens in large groups. An assessment happens on an individual level. So reevaluations might happen to an entire neighborhood where an assessment is just pertaining to you. So reevaluations can result in an increase or a decrease in property tax. Again, you as a homeowner may have different feelings about this, but it's very specific when it comes to just the senior freeze. So you want to use the reevaluated amount. And if the reevaluated amount leads you to have an amount that's lower than your established base year, then you're not eligible, which means that you need to reestablish for that lower amount. So in the long run, you're paying less, which is better for you. I re-emphasize this because I can't tell you how many times back when in my golden years when I was in the call center, how many times people used to get upset, right, Mo?
Absolutely. Yas, we have a hand raised. Can we,
Sure, we can discuss.
Patricia, is that your name? If you could unmute yourself. I don't know. If she's there. Patricia? Okay.
Yes.
Hi, you have a question?
No, you answered it. It was 2 years if you move.
Okay.
Yeah.
Excellent. Okay, so that's, as far as reevaluations go, that's pretty much the gist of it. If it brings it below your base year, then you're not eligible. You have to reestablish, and for on those future applications. Now, for an added assessment, again, this increases your property value, so you actually have to adjust your base year. So you have to go back to the base year, let's say 2015. There's a specific tax rate that would be indicated on your verification form, like the PTR 1A. So you take that tax rate with the new property value, and that's how you calculate your new base year. All right, so you're using the same tax rate that would have been from, say, 2015, but you're just using your new property value to calculate your new base year amount. All right, and so this would apply to just the base year and the current year. All right, nothing else in between. Just the year that the assessment occurred, as well as the base year that you're already locked in for. Okay, and now we always, of course, can appeal a determination. So an appealed assessment can also result in much of the same thing, an increase or decrease in your property taxes. Therefore, you must notify us as a division. The way you can do this is by filing an amended application. There is no amended form per se. All you will be doing is taking that same application and writing amended across the top. So once you complete this with the new information, we'll receive it, we'll review it, and if it results in a greater reimbursement, then the division will issue you a separate check for that increase. And if it's a lesser reimbursement, then the applicant is required to pay the difference. All right, so if you file that amended application and it determines that, then you have to do so. I see a couple questions in the chat here. All right, it says for a married couple, do both of you have to live in New Jersey for 10 years? No. So for whenever you're filing a joint application for the senior freeze, just one of the two in the couple have to meet all of the requirements, not both of them. All right. And the second, if you haven't completed taxes for 2018, can you still file the PTR1? I'm not sure. Oh, you mean your income tax return? Patricia, could you clarify that for me? If you haven't completed your taxes for 2018.
Oh, that's not me.
Oh, okay. There was a question from Patricia.
Oh, Patricia E., that's someone else, yeah.
Okay, right. So you can file this application regardless of whether or not you have filed your income tax returns. We do use your income tax filings as one form of verification. I don't want to get too convoluted here as far as statutes and everything, but basically just to sum it up, when it comes to your income taxes, you have 3 years to file that return. So if April 15th, 2020, I know the deadlines got changed this year because pandemic, but if it was April 15th of 2020, you have 3 years to file. However, for a PTR application, so the same statute remains for the state. We actually, as the state, have 3 years to review your tax return and send you any correction, any bill that might occur, and we have 3 years from the time that you file. So the same thing goes for senior freeze applications. Once you file your senior freeze application, even if you receive a reimbursement, the state of New Jersey has up to 4 years rather than 3. There's a 4-year statute of limitation for senior freeze, where for 4 years we can always go back, and if there was something that was incorrectly reported, we can adjust it and notify you, however it might be, if it results in a bill or what have you. All right, so you can do it despite of filing your taxes, but just understand what that means for you entirely. All right, I hope does that clear it up, Patricia E? You're very welcome. All right, so we've discussed now the moment we've all been waiting for: missing prior year filings. All right, so there's many reasons why this can happen. You've either forgot to file, you missed a year. Again, I was 4 years in the call center, so I remember and I know very well what scenarios can come about, whether it's medical emergencies or just so many things can happen. There's always so much going on in life, and it just happens. You either forget to file, you miss a year, it's okay. What we allow you to do is you file a PTR1 form for each missing year. So if this is multiple years, there's going to be a lot of overlapping information because you're going to be doing a 2-year application for each year. Okay, but you still have to complete it in its entirety and include the supporting documentation. This is just, I also worked in the review department for PTR and homestead benefit, senior freeze, and it makes it easier to review and get those get the issue cleared up for missing years. So that's why you have to file the PTR1. They don't send PTR2s for missing years for multiple years anymore. Okay, so what this does when you file these missing years is it backdates your base year. So if this is your first time filing, but you could have been filing since 2010, then what it does is if you file all the missing years, we verify all of the information, we backdate your base year to 2010. So this doesn't happen automatically. The more current applications are given top priority. So we have to make sure everyone that's filing on time is also receiving their reimbursement on time. And then once that all goes away, so after December 31st, once we've received all of the, hopefully, all of the required applications and get those processed, then during the off season for senior freeze, that's when they start to go back and process all of those other years to see, well, let's see what happened here. So, of course, as mentioned earlier, there is no reimbursement check issued for late applications, meaning that the years that you missed the deadline, so you can't receive a reimbursement for the years that you missed because of the deadline, but you get the backdated base year. So let's say you're filing the 2019 PTR1. You receive a reimbursement check for your difference between 19 and 18. So that might be a small amount. But then once we go ahead and process all of your other missing years, going back to 2010, your base year gets backdated for 2010. Now you get the difference between 2018 and 2010 because you already got the difference for 18 and 19. So now you get the difference from 18 going all the way back to 2010 or wherever your backdated base year falls. All right, and this here is our income limit history. This screenshot only goes back to 2010. And I believe if you want to go back further than that, that information is available on our website. But these here are the income limits going back to 2009. If you look on the left-hand column, are the actual limits. And on the right column, those are the limits when those budget restrictions that we discussed earlier were imposed. So anyone who was, so that's a non-issue really if you're doing back year filings. What you want to pay attention to is the income limits given on the left-hand side. Those were the limits, those were the filing limits.
Yes.
Yes.
We have a question. It says going forward, I guess, what did you expect the approximate deadline to be for 2020 PTR? We have no idea. We just wait until the budget is passed and, just to even see if the budget is going to call for a PTR next year. So we don't know the deadline, but generally deadlines are October. Mm-hmm. And then if it's like, if it falls on the weekend, then it goes to November the 2nd. But, for this year, like Yas mentioned earlier, the deadline is December 31st, and we just don't have any information right now for 2020. Do you have any information for 2020, Yas?
No, only thing I can go is from past experience. Remember, the senior freeze used to be due in June. It was late June, and then it always ended up getting extended for 3 or 4 months.
Right, until October.
Yep. So they have eventually did away with the June deadline and changed it to October. But again, because everything has been changed, typically the budget was decided by July 1st. This year it wasn't decided until October 1st. So, we're really just a couple months underway into the new budget. So what is to come next year is probably the most unpredictable year, at least that I've seen. So there's really not much that we can say other than what we've experienced in past years, which is that we do try to give ample time to everyone to file this application, because like we discussed, there's a lot of life changes that go on a year-to-year basis, especially for a lot of those individuals or couples that are filing this application. So we do try to give plenty of time to file, but unfortunately no approximate deadline for next year. All right, so that covers previous year's filings. So that pretty much covers the entire information that I could provide for the Senior Freeze application. Going forward, we'd just like to give you some resources in case you do have any follow-up questions. And there have been some changes to how we operate as the Division of Taxation during this pandemic. Our call center is still active, very much so. They are only closed on Fridays now, but Monday through Thursday, they are fully operational, 9 a.m. to 4 p.m. Okay, so again, that Senior Freeze hotline number is 1-800-882-6597. And that is on the cover of the booklet, as well as the instructions. But in case you need the main hotline number, that main hotline number is 609-292-6400. And again, open Monday through Thursday, 9 to 4. All of our regional offices, you may recall, they're all throughout the state. We have about 6 or 7 different offices, but all of those are closed except for Trenton. Those meetings are being done by appointment only, and those business hours are Monday through Friday, 9 to 4 p.m. So if you do want to schedule an appointment, then that can either be done online by going on njtaxation.org, or you can call in 609-943-4093 and have that appointment arranged. But for the most part, I think that they are doing their very best to try to get situations resolved over the phone or online. So coming in person is absolutely a last resort measure. All right, and we also now have a social media presence. We are on YouTube, where we post a lot of informational videos, a lot of update videos. So if you are going to just pick one, if one is your limit, I would certainly recommend YouTube, because we do constantly add new informational content. If you want to follow us for more comedic relief, if you will, but also still information as well, then we do have Facebook, Twitter, Instagram, and LinkedIn, all there for you to receive information as well as communicate with us. Those questions that come in are fielded. I do want to give forewarning, so please do not put any personal information. Day one, we launched the Twitter page, and the first day, one of the first comments we received was someone's social security number. Please, please, please do not put your social security number on a public forum, ever. Not just for us, ever. So with that being said, that pretty much wraps it up. Are there any other questions?
We do have to wrap it up, Yasser and Monisha, because we have another program starting. I thank you so much for coming, and I think people hopefully have a pretty good understanding of a great program that hopefully will help some people. So thank you so much.
You're very, very welcome.
You're welcome.
For having us.
Thank you.